Welcome back to my more important analysis videos on Wednesday 1st of February with me, Richard Paramarket Analyst at Hantec Markets, looking at dollar yen now. We've got this sort of outlook on dollar yen where you had these two big bear candles that certainly questioned the validity of the support around 112.50. Yesterday we saw the sort of move towards 12.05 and then bounced, closed above the 12.50 level. So you're still arguably holding on to this as a bit of a near-term range play. You've broken the downtrend, so there are a few sort of mixed signals really going on in this dollar yen chart as well, because you've got the RSI which is holding above 40 still, which arguably is higher lows, isn't it? MACD line's plateauing a little bit, stochastic sort of bumping along. It's all sort of fairly neutral and fairly much pointing towards a range play, certainly with the rebound again today, 50 ticks higher on the day, sort of back into that ranging mindset really on this dollar yen chart. You can see here that yes, you've had this sort of initial breakdown yesterday, but you sort of broke back above that level and you started to find that as a basis of support again around that 112.50 area. So the key, if you can see dollar yen back above that 114, which is a pivot near term, 114, bit of a near term pivot. Nothing too accurate on this, but a bit of a near-term pivot, but it was the reaction high yesterday. If you can see the dollar yen back above that, that should again improves the outlook. Now you've got a resistance band 114 to 114.35. Again, 114.35 is a bit of a breakdown level, so a bit of a resistance band of sort of 30-40 ticks there. But this outlook in the MACD lines certainly have improved, but they're not above neutral yet. Stochastic's beginning to turn over again, so watch out for that. It's all sort of a range of mixed signals, and it's not necessarily to be unexpected considering this sort of toing and froing that we're seeing in the dollar at the moment. Also, we've got the Fed tonight. That adds an extra layer of sort of volatility. You've also got the ISM manufacturing data this afternoon as well. So you've all these sort of lay into the mix of a fairly sort of mixed and uncertain outlook. And looking at the candles in the last few weeks, I think that's fairly indicative really. Strong bear candles, strong bull candles, reversals, retracements, and ultimately momentum indicators are not really showing too much direction. So very slightly negative bias, I think you would say, considering we sort of intraday broke down yesterday, but again today's rebound sort of adds a bit of confidence back in, but nothing too significant, I would say. Very short term outlook of trading, I would suggest. Anyway, I wish you good luck in your trading today, and I'll speak to you later.